Alright, so like I said, everybody have different understanding of structures. I'm only bringing our understanding here. Alright, this is what pleased me, and that is what I'm also going to teach you guys. Okay, so this is the popular, for those that don't know this before, for the new people that are joining us, this is a bearish structure. Okay, consistency in forming higher highs. Consistency in forming lower highs and lower lows. Alright, so the bottom is the low while the top is the high. Alright, so a low that breaks another low forms a lower low. So let's say this is our low, that's L, this is low, alright, and this is a high. Let's say this is our high. So this is our high, alright, and this is our low. So here becomes our lower high, which is LH. LH is lower high. Why is this called lower high? Because where price from the high is in a lower point than this high here. Sorry, hold on. Sorry. So where price from this lower high is at a lower point. It is below this high. Alright. It is the same way this will be called a lower low, LL. Why is it called a lower low? Because it broke this former low to form a lower low here. Okay, so there is a break of this low, which SMC calls the break of structure. So this low being broken makes the low that breaks it a lower low. Alright, the same way we have here lower high, because this point is lower than the former one. So that is how a bearish structure is. The consistency in forming lower highs and lower lows. Alright. For a bullish structure, it is the consistency in forming higher highs and higher lows. Higher highs and higher lows. Alright. So here we have our low. This is our low, which is L. And here we have our high, which is H. Okay. So here becomes a higher low, which is HL. Okay, this here becomes a higher low because this low that was formed is at a higher point than this low at the back. Okay, here becomes a higher high, which is HH, because this high that it formed broke this former high. Alright, to form a higher point for price. So there is a break above. Alright, that is for bullish structure. You also have the ranging, where market is ranging. Market is neither forming lower lows or forming higher highs. Market is just there ranging. Okay, so there's something that you should know. Let me just explain the concept of weak high and weak low right now using the structure. Sometimes liquidities are formed like this. Even engineered liquidity is formed like this. That maybe price now failed to form a new high. For example, let's say um, price continued going up. Let me just create a new one. This is our bullish structure now. All right, pay attention. So now a high is supposed to be broken. Then there needs to be consistent break of highs in order for the bulls to keep up, right? Now in a situation where price now form a low here, and then we have this high, right here. So if price now fail to break from this low, price is coming, now fail to break this high, it can make this low that was formed here. Let me highlight it so that you guys can see it. This is the low that was formed before price attempted to go for the high, right? Now, if price failed to break this high, this low will become a weak low, because a weak low is a low that fails to break a high. All right, so this low becomes a weak one, and because it's a weak low, price can easily come back to take it out before it attempts to go and take the high again. So the first attempt, price failed to break the high. All right, so price now came back to take out the weak low before attempting to go back to break the high. Now, this is how engineered liquidities are formed most times. Yes, I'm recording, Mr. Mazi. This is how engineered liquidities are formed sometimes. We are going to go into, we will get to that. We just started. So, sometimes, for example, let me go to the chart and show you guys what a weak low is right now. Okay? So now look at what I'm talking about. This is our high now. This is a high. Okay? Now, we have this low. Look at our low here, for example. It attempted to break this high, but it failed to. What happened? Price came to take it out as liquidity. Alright? Now, this low that was formed here, you can see how price moved to almost take it out. But price failed to take it out twice. Look at it. They attempted here. And then price came all the way down. Since it failed to take out the high, the low becomes a weak one, and price will come and take it out. Now, for some of us that already have knowledge about liquidity, you know that okay, this becomes like an inducement or engineered liquidity or whatsoever. That is what I'm trying to make you understand where here. Okay? That sometimes price can fail to break a high. It doesn't mean that because it failed to break a high that the market have now changed. No. Don't forget that we still have our higher low here that have not been broken. Okay, don't worry. It is the same thing for a bearish trend, of course. A weak high. So let's say this is our bearish trend. I will talk about the weak high now. So let's say we have this low, all right, and we will now form this this lower high. So price now attempt to make a new low, but it failed to, which means this low have now been protected. Okay, price trying to protect the low. Now look at what is going to happen now. Since this high was formed, highlight the high. This high was formed before price attempted to come from the low. Failure for that high to come and break the low will make this high a weak high. So price can go back, take out the high before coming to the low, which makes this highlighted high to be a weak high. That gives us a weak high is a high that fails to break a low. Look at it. It's a high that fails to break a low. So price will now go back for its high. That is how price engineers liquidity. Okay, let's continue. So this, I just want to establish this before we continue because it's so important. It's so important. Okay, so for the uptrend, for the higher high, higher low thing, just show you an example of what I mean. Let's go to 1 hour time frame so that we can see the structures clearly. For example, we have a bearish trend. So this is what I mean for those that are just that we are just introducing this tool for the first time. So let's say we have this high now. We have a high, right, which is H. Okay, and then we have a low, which is where price, of course, formed a low. So let's say this is our low and this is our high, for example. Okay, now the next high is now a lower high. All right, this is now our lower high. Why? This is the last high that was formed before price came for the low. Okay, so we have our lower high because it's at a lower point than this high. Then we move on to the lower low, which is LL. Okay, which is here. This is our lower low because this is the low that broke. This is the trend that broke this low. So this is where the low was formed before retracement happened or consolidation or whatever. And this is our lower high. So this is what I was trying to explain just now. Look at what I was trying to explain with my weak low and weak high stuff. Look at it. Let me zoom in so that you can see it. Now you can see this high that was formed. Look at it. This high that was formed, right? This is the low before that high was formed. Look at it. This is our low. Okay, this is our lower low. You can see the high was formed and price attempted to come and break low from here. But price failed to break this low, which automatically makes this high, this particular high, a weak high because it failed to break a low. So because it failed to break this low, price went all the way back to take out the high, to take it out. So this high is a weak high. Why? Because it failed to break a low, which is this low. You can see where it stopped before price now reversed to go and take it. So ideally, this is an engineered liquidity. We'll go into that. So that is how it is. All right. When price fails to break a low, price aim for the high. When price fails to break a high, price can aim for the low as weak high or weak low. Let's move ahead. So you can see the lower high came to form a lower low here. Okay. So this is a perfect bearish trend. Sorry. This is a perfect bearish trend. If you want to really study structure, I always tell my mentees, you should study EU. EU is, I don't know, I've not seen any structural pair like EU. Forget that I don't trade EU, I only trade gold. It's the structural knowledge that I learned from EU that I brought to gold, and it's still working for me in gold. Alright, so this is lower high. So this is a perfect what? Bearish trend, as you can see. This, on the other hand, is a bullish trend. Of course, I don't need to label it anymore. You can see it's a high, a low, a higher high, a higher low, a higher high, and a higher low. Okay? So, I don't need to label that. You already have the clue. This class is also recorded, so you can always go through it to know what you want to know. Now, the reason why I'm teaching you guys structure is not even to tell you this is a higher, lower. The major reason why I want you guys to learn structure is for decision making. Okay? How do I know when trend is going to change? That is the question in everybody's mind. Everybody that is here right now will be thinking, is Lex going to teach us how we are going to know when trend is going to change? Because that is the question that everybody is asking. So I will just tell you one of the ways to know when a trend is likely going to change, or when you should not take the following point of interest of a trend. So we have our, let's use this is a bearish trend now. Okay, this is, some people already know this, but they've just not studied price to validate it. Some of us, we know this already, we even read it on threads and all, but we've just not, I don't know if we are lazy or we've forgotten to study price, or we just took it casually. But when I show you something now, you will see that it is real. I've taken time to study it with EU before I even brought it to gold. So when you are on a trend and you are seeing price consistently breaking lows, just like I showed you guys just now. Where is it? Oh, some of the patterns that we marked are still here. I thought I showed you guys a bearish trend just now. Okay, here. Okay. Just like I showed you guys here right now. I said when price have created 3 or more lows like this. This is 1, this is 2, and this 3. It can be 4, it can be 5. But immediately you see that it is more than it is 3 or more already, don't take the following point of interest. Okay, let's say price have created 4 and you want to sell from here. Don't take the following point of interest. Don't sell from here. Okay, don't sell from here. Most times the following point of interest becomes the liquidity that price needs to continue. Okay, so where you should be looking at that price is going to break for trend to change is the second sell zone. We are using a bearish trend now, for example. Is the second sell and price need to close maybe as from 30 minutes or from 1 hour time frame, not 1 minute or 5 minutes. I don't know about 1 minute or 5 minutes. So don't take the next point of interest to sell, please. Just ignore it. Be patient. Once you have seen that price have done this and done this and have done this 3 or more times, and you want to now sell from here, don't. This will be the manipulated zone. Price will likely manipulate here, like 80 out of 100 times or 90 out of 100 times. Price will manipulate here out and use the second point of interest. So this is where the decision making happens. The decision to continue or to reverse will happen from. So price will either, two things, price will either continue after taking out, manipulating this place out, or price will break to reverse. Alright, so whatever you are going to do, whatever you are doing, make sure that don't even assume it. Okay, don't assume it that did I sell from here or not. In fact, let it sell. Whether it's going to sell or not, leave it. Let it sell. But the moment you are going to sell from here, don't expect a high probability trade the same way it has been coming from here. Don't expect a high probability trade like that. Don't. Now, here is where the decision is. The second sell zone. It is the same thing for buys, please. I don't know if I should now explain buy again. So 1, 2, 3. Okay. After that third break, don't take a buy here. Don't take a buy here. Alright. If you like, let it buy for the fourth high. Let it go. Don't take a buy here. After the third break, third or more, because price will likely manipulate that demand for the second demand for continuation. Gold that you know do this a lot. I will show you some examples. When some of you say, Lex, how did you guys this is one of the things that I consider. That's why I said everybody should be in this class when I'm teaching this. This is the second demand. Some people will be selling here already because we've rated the first one. This is just a liquidity. It is when price breaks the second demand that price can now read out the whole range. Okay, that price can now read out the whole range before it can now turn bearish or turn bullish. So what I mean is that where the range structure started from, like where the highs and blah blah started from at that particular point. So price can read it out completely. But this is where the decision starts from. The second demand. Okay. not the first one, please. I believe some of you guys already understand what I'm saying. So let's just check EU. Let me show you guys something EU before we move to gold to show you guys what's there too. All right. So we graded this out. Okay, let's say this is our. I don't even know where to start from because if you even if you start from 2023, the structure is already there and is still following till now. Okay, so let's just say we have our first, our second, our third break, and price weighted it out. Price weighted the second demand, of course. Bulls they came in and they started breaking highs, as you can see. So you can see our first high was broken, the second high was broken. I always consider my high valid or my break of high or my break of low valid when a liquidity was taken or liquidity was in demand before the break. That is how I personally I consider my own. I don't know for other people. Okay, I don't know for others. So let's say this is you can see what happened here. You can see what happened here. We broke our first, I broke second, broke even the third and then fourth. And then the following demand, what happened? One of my mentees that was teaching, I think it's an Indian also, messaged me this time like last year in August, like he wanted to buy here. So I just asked him how many structures have been broken from the uptrend. That's the only thing I asked him. And he did not buy anymore because price have broken three or more. So you're not supposed to follow the following demand, right? And you can see how price rated that. So even in a range like this, in a range like this, you still need to consider how many highs or lows have been broken. All right, how many highs or lows have been broken? This is a downtrend now. Okay, you can see that even after price rated this out, we have one, two, and then price took liquidity to make this three. Afterwards, reversal. But that's not what I want to show you guys. What I want to show you guys is this massive bearish trend here. All right. After price took out this demand, we've been selling. Price took out this demand. This is the most important part that I want you guys to pay attention to. Okay, we took out the demand. Nothing is wrong with that. But what was now happening here is what surprises me the most. How EU have managed to follow this principle from the beginning to the end. We broke this first low, alright, after price engineered liquidity into this fair value gap, which is good. For those of you that are just hearing fair value gap for the first time, I will teach you guys. So price came all the way, was ranging in lower time frame from this low, and then price broke it, which is good. Now this is our second low now that we broke, right? Okay, so price from lower time frame structures, and then before the retracement happened and from this low. For some of you that will be asking me, that is going to ask me, Lex, why didn't you count all these small structures inside? These are smaller time frame structures, please. And also there are some things that I will say during the class, and some of you will now still come and be asking me. Please, as you attend the class, also watch the recorded video so that you can have more understanding of what or maybe the part that you miss, you can fix yourself and align. Okay, please. There's a reason why I record every class. It's so that you guys can go through it again and get the things that you did not get. So this is our 1, 2, and then 3. Okay, which is good. Price protected the low that was created before this range. Now this range was not, it's not even what I'm concerned about. What I'm concerned about is after the third break, this is our next supply. Why is here our next entry? Because this is the last high that was created before price broke this low. Where is the last high that was created before price broke this low? Here, which is our second supply. Can you see what market is doing? Market has raided this out as liquidity, ranged until price came all the way to the second supply. To the second supply zone. And what happened? Look at it. All the way down. That is why I said this is the decision making zone. Whether price is going to reverse from here or it's going to break, whether price is going to break it or it's going to continue going down. This is easier to trade when you even have a higher time frame target that you are looking at. Okay, so price, what happened? Price broke below, alright, which is good. Now we started forming new structures. Look at this. Just look at this. We broke this low, right? So this is our first low. Yes, after price manipulates and then continue, is a new count that you will begin. Okay, you start a new count. Alright, so price came all the way down, manipulated this high to break a new low. There's a liquidity play there, so it's a valid low. Please, we've not entered liquidity. When we are doing question and answer, that's meant about liquidity, please. Thank you. So we have broke this low and broke this low and broke this low. This is the third low. Our market did not form a fourth low yet. But look at what happened there. Where is our following supply? Here. This is the last high. Why is there our following supply? The last high. This is the last high before this low was taken out. So that is our lower high. Okay, the following point of interest, the following entry. Now, because this second break in the middle, this is the last high that was formed before this break, right? Now look at this. This is where price fought its way, forced its way out of this following supply and came for the second supply. You can see how price tapped in, then all the way down, all the way down, all the way down. You can see that. You can see that. So it is not, structure is an interesting thing. If you don't need to know everything, that's it. You don't need to know everything. This Mr. Shiba, are you in this class? Because you are saying something else. Are you sure you are in this class? This man. Sorry. So even gold, everything that have been happening still follows structure. Okay? Everything that have been happening. I don't even know if I change it to 30 minutes, I'll be able to come all the way to this place. Because what's happening here, structure followed it. Some of you that follow me on Twitter or what my WhatsApp status, you see that there was a time I was talking about, or that I called this trade from a 4 hours fair value gap, which has had some discrepancies here. I don't know if 30 minutes will be able to come, be able to take me all the way back to that side. I'm using premium trading view, so it's supposed to get there. My network is a bit slow tonight. Okay, let's see. All this we are going to talk about them. They are all foreign structures, so that you will not be surprised. Alright. But let me just show you guys something following what I've been teaching. Oh, we won't pass this. Okay. I'll just show you guys something. You guys are going to do a lot of studying. It's not the one that I've been saying. So people will study really well with what I have taught, of course. If you are studying with something else, that is your choice. So this fair value gap happened here. This CPI, this move happened due to CPI, as some of you know. CPI round of USD, very volatile. This happened due to CPI. So when price broke this range, okay, if you want to still look at this range now, how many breaks, you will see that it's 3 or more, okay, because since when we tapped into this fair value gap, we broke this low and broke this low, and then price finally came to take out this low. That's 3. So the reversal was even following the breaks. But that's not what I want to show you guys. What I want to show you guys is this, that as you are following structure, even if you have a higher time frame target, you still need to follow structure. After we broke the range, what happened? We have a high. This high was formed after price engineered liquidity, which of course I caught. And then we have a second high. This also happened due to engineered liquidity, which I also caught. And then we have the third high, which price engineered liquidity on the Monday. On this weekly open, price engineered liquidity, and we broke the third high. Now look at this. Some of us were already bearish here, but you know this is the second demand zone that I'm talking about, because this is the last low before this high was broken. So we have a second demand here. You can see how it saved price. What did price do? Price now used the following demand after the third break as liquidity. That is what happened here, so that you'll not be surprised. That is what happened here. So this was valid. Alright, it was valid. It's a valid demand. I'm just showing you guys. I'm picking some examples for you guys. Alright, so that you know that gold follows structures. Even here, I don't want to go to 15 minutes now. It's 15 minutes that will best explain here. When if I go to 15 minutes now, it will be hard for me to come all the way here. Okay, because when price raided this liquidity out, this low out, I was expecting a big move all the way up. But you see, when price started forming these internal structures, broke this high, and then broke a third one, it signals reversal. Okay, it signaled reversal. Before it got to this high, price have already broken 3 internal structure highs. Sometimes I use it like that for confirmation. When I took this trade, some of you that follow me on Twitter, you see when I caught this trade, I used the same structure principle. After the third or more, price will either reverse or take out the first demand out. Okay, as you can see, as price was ranging, first I was targeting this high, of course, but when I started seeing how price was And I was now seeing how price was ranging, broke this first high, broke the second one, and broke the third one inside the fair value gap. That is how I took the sell. I didn't assume the sell from here. That is the mistake that some of us make. I didn't assume the sell from here. I was fully buying here until price started forming the structures. If price really want to buy, it will not be counting these structures up right here. It will move. Alright, it will not be ranging all these structures. So if you have a POI and price is doing this, it's a high probability that it's going to play. But it has to be 3 or more before it gets there. Pay attention to that. So I'll just show you guys another example. I think there was one time I was running a bootcamp for free bootcamp for my followers last year thereabout. When we were here, this was where gold was. I told them that gold is going to buy. The following week, gold was still here. You can see the weekly open. Gold was still here. Why? Why did I say gold was going to buy? When we get to liquidity, we will know that this is structure class. So you can see the weekly open. Of course, we broke this range out and started forming highs. Now look at the trick. Look at the trick that gold used here. Okay, pay attention to the structure. Yes, we have a higher time frame target. It's good, but pay attention to what is inside. What's going on inside? Because you can have a target and you will not be able to enjoy the trade before price get there. You will just know where price is going to, and you will not be able to take trade to enter there. It's just like me sometimes when I'm seeing gold sell, and I will not able to, my entry will not even come, or I will not even be able to take entry to sell. But I will know that okay, price is going to this is falling to this particular level. Okay. So you can see how I've marked the highs that were broken. Alright. So price was going up and started counting highs. So there's something that happened. After the fourth high, I used the internal liquidity to enter price got to this high. Okay. It was like in midnight or thereabout. What time is it here? Okay, yeah, it was in midnight now. Price took out the high, and I was not wondering. He's taking out 4 highs already, and we've never gotten to where I'm expecting price to go, which is this. That means price is likely going to manipulate one demand. I close my buy. It is you cannot just close your buy and assume it. Okay, you need to be confident in what you do. As it. Confidence is for yourself. It's not for what market is printing, please. It's for yourself. What you studied, the conviction you have, you know. So you can see that after this fourth high, this is our following demand. Price used it as liquidity for this low. The market is bullish, right? This is our second demand. Why? Because this is the last low that was formed before this high was broken. Okay, this is our following demand because it's the last low before this last high was broken. Price used it as liquidity. Alright, I caught this trade when I posted on Twitter. I don't know. Lex, they use magic and how do you look at it? You can see that it is following the same structure principle that I'm showing you guys. Please, you must study. And when go do this kind of thing, it's always when it wants to make an impulsive move. For my study, that is what good. If gold want to do this kind of thing, want to manipulate a low or a high before it continues, it wants to make an impulsive move, and if you're able to catch it, you are so lucky. Interestingly, this After this liquidity high was taken from this trade, alright, why have I been bullish on gold since this year? Is because structure, what structure told me, okay, or what structure is telling me rather. We took out this price came all the way down. First of all, the first thing I saw is on the daily time frame. I think I was talking with one of my trader friends, and I told her that gold is likely going to buy. I was looking at the daily time frame. Price was around here, and gold is going to buy. My first target was here. It was not even this 3,500 looking at. It was here. This was where I was looking at the first target before we graduated to this time. Okay. So let me just show you guys something now before I close the class, because I've showed you guys enough already to study. Now if you look at this high, this particular high that was formed, we have a low. Okay. So you can see that after this buy happened, I assume that okay, this is now a weak high. This is now a weak high because it failed to come and take out this low. Okay, so that's my own assumption from what I know. Okay, for some of you that will already know that this is this is liquidity and there is a fair value gap. Okay, that's fine. But we're talking about structure right now. So assume that this is a weak high when price was still around here. Assume that okay, this is a weak high and I want to trade gold. I want to buy gold to come and take out this high because it's a weak one. Failed to take out this low. That's what I assumed. And then I went to my 1 hour to check the structure. So important. Now this is what I found in my structure. I assumed here to be my first break. Alright. So price formed the structure here. This favor we got to break it. And then here's my second break. And then here is my third break. Before price took out the higher time frame liquidity. For some of you that already know what liquidity is. Of course, they are going to trade liquidity separately. So now I've seen my 3 breaks. So this is what I did. Market started doing all of this in December. Alright. So I was able to catch a buy. So you can see that after the third break, this is our following step, which is not going to react. As price is coming, you can see price did not react. This is where the decision is. The last high before the second break. As you can see, price did not close above it, so it has not broken yet. Okay. So it is when price now closed above it here that I was now seeing buy. Okay. So all this buy that happened, I've already closed my profit around here also. I'm sure some of you will see it. I've already closed my profit since from all this zone because I don't want to be trapped. I don't want price to come all the way back. Come on, take me out. So let's go to 4 hours now so that the chart will not be too rough. Wow, we're almost 1 hour into this class. I will soon round up so that we can call it a night. Structure is broad as I told you guys. Okay, so this is our second supply now. Look at this, our second supply. First one did not even react. And you've been wondering why did it not react? I've told you after the third break, the following supply is likely to be liquidity. You can see it. Price went for the second one. And it still tried, so price sold all the way. So I was not bullish, fully bullish yet until price broke. prove this second supply all the way up, and then we started looking for buys. So now that price have broken the supply, I want to start the count now. We broke one high, and then we broke the second high. So this way I now close my profit. Because around there I close my profits. I caught the buy to get my total loss. So that my trader friend now said that she's looking at this higher time frame target. So me, I now came back to come my structure like, okay, since we still have, we just broke the second high, there's chances that we can still break a third one. But you know, price have done all this work, went all the way up, and we broke the third one. So this is what I now say that, okay, since we've broken this one, market opened, and my mind was not carrying any demand here. And I said, okay, we will come for this low. Since we've broken TV already, we will come for this low. We've broken the third high. We will come for this demand. To manipulate this demand as liquidity. I think the same Monday, that's when it happened. You can see that. That's when it happened. Price manipulated the following demand. And price all the way up. Still continued the same structure principle. See, look at it. Forget all these ranges that is ranging. It's still the same structure. Still the same structure. Look at it. Broke this high. Alright. We broke this high. Alright. We broke this high. Okay. Now look at this. Price broke this high. How many is that? 4. Now, after price broke this third one, I was letting price to come all the way back. I was looking at this low already. Now price will manipulate this low. Look at it. The price will manipulate this low as liquidity. But when price now broke the fourth high, and I said no, I will not expect price to close below this demand anymore, because this is now my second demand, because we've broken the fourth one. This is now my second demand. That's flexibility for you. As price do what it wants to do, you should also follow up. So when all these sales were happening, of course, and when sell is happening, my trade is always, I'm always quiet. So the sell was happening on Friday. We took this low out, but we did not close below it. If we had closed below it, we would have sold more. Price just took it out on Friday. And then on Monday, I said I went to buy, because this is my second demand. It's not closed at it. So chances that we're going to buy is still there. Monday opened with a gap, and we can see what happened next. So it is not only because market is, fundamental is doing blah blah. You can still see that even as the fundamental is doing, market is still forming structure. Okay. So this is going to be. I can't accept any questions tonight, please. It's almost 1 hour into this class. I'm sure all of us are already tired. So this is going to be okay. Every question that you will have concerning this class, which I believe you are not going to have any question, if you watch this class properly, you can ask them during the week in questions for the mentor group, and I'll answer them. But I don't see any questions coming out from here. If you watch the recorded class again, please, if you ask me a question that I've answered the class during the class, I'm not going to answer it. I will tell you, go and watch the recording again. Okay, so please, let's call it a night. Please go and watch the recording. I'm going to drop it. I'm going to drop it tomorrow. Everybody go and watch it again because I've said a lot, a lot, a lot. I've said a lot. So don't just use because you attended the class to come and be asking me questions. At least watch the recording first. You will find the answers to your questions there as regarding structure. Thank you.